we're still committed to supporting the founders from like the very early stage, basically like also first-time founders, technology entrepreneurs. That's where Fulgur's strength comes at its best to support the Bitcoin ecosystem.
How do you think about investing in infrastructure for Bitcoin and related technologies? Hear from one of the world's leading venture firms focused on early-stage Bitcoin startups, Fulgur. Join us as we have a fascinating conversation with Oleg, managing partner, on this topic. As a reminder, this podcast is for educational purposes only. If you enjoy the content, please remember to like, follow, or drop us a comment, as this all helps us greatly. Lynn and Israel are partners at Base Layer Advisors, where they employ their strong network of venture capital partners and startups to connect investors with unique opportunities within the Bitcoin innovation space. Alongside this, they support founders with their strategic growth and fundraising goals. Visit our website's advisory section to learn more. Welcome to Build with Bitcoin. I'm co-host Israel Munoz, joined with co-host Lynn Bairstow. Today we welcome Oleg, co-managing partner at Fulgur Ventures. Oleg, thank you so much for coming on today. We're really looking forward to the conversation.
Yeah, well, guys, thank you so much for having me, and like the pleasure is all mine. Thank you for taking the time to arrange this.
Fulgur is one of the oldest, or one of the original venture capital funds that's purely focused on the Bitcoin space and really supporting. You've got an incredible portfolio of companies that you've been supporting. And before we get into that, though, Oleg, we always love to start with a little bit about your background and how you personally became introduced to Bitcoin and why you feel it's so important that you wanted to devote a fund to investing in it. So can you share a little bit about your backstory?
Yeah, well, thanks for your kind words. We at Fulgur, we really strive to support the ecosystem as much as we can since about 2018, and I started to. It's interesting enough. I started to learn about not about Bitcoin, but about the Lightning Network. So that's like how I came into the Bitcoin space. Uh, Not as like anything related to lightning or investing or trading, but just driven by curiosity in Bitcoin scaling technology. I heard about Lightning Network in 2017 from someone who was working at Lightning Labs, and we kind of like started to interact, and I started to learn what the technology was supposed to be able to do, and since I've been like a technology entrepreneur for like a couple of decades, I've kind of like developed this way of looking into the next frontier of technology, like recognizing early technology trends, especially in like software infrastructure. That's pretty much what I've been doing like most of my life in the software space. And I was really captivated by the potential of Lightning as a scaling layer for Bitcoin, and for Bitcoin to become this neutral platform and enabling settlement of monetary value. So I've been learning about Lightning since then, and it's like it has been a never ending journey to stop learning, but it was driven by curiosity in technology, and by my desire and urge to figure out what's the next big technology disruption wave. I wouldn't imagine that it will become like so disruptive, touching like regulatory, financial, like monetary aspects. I was first approaching it purely from like infrastructure technology point of view, but here you go. So now it's so many things to learn about not only technology but about finance and everything attached.
Yeah, that's super interesting because I think so many people come into Bitcoin and look at it like store of value, monetary, but you really must have identified its medium of exchange and just being able to create a different financial rails system from a tech base. So that was your perspective going in, was more the tech side and monetary exchange than store of value.
Yeah, and to make things like even more complicated, here are like stable coins on Lightning potentially coming, so you can have like exactly as you were saying, you can have a technology and a platform to facilitate exchange of monetary value, but not even like potentially denominated in Bitcoin only, but also denominated in like for example like in fiat terms, or in something else, one you can have tokens enabled over Lightning Network, or also tokens that already are possible to be issued on the Liquid Network, for example, which is like the other approach to scaling Bitcoin as a layer two and a sidechain type of approach.
And then taking it from how you were introduced to Lightning to starting Fulgur Ventures, what was that journey like? How did you decide to start a venture fund to invest in these companies, which isn't normally a path people take immediately into supporting the companies versus investing in the asset itself?
Yeah, so again, I was like primarily driven by curiosity and in technology and like from the entrepreneurship like domain. So the person that I met, he eventually wanted to start his own startup, and I was already familiar with helping founders to get early stage funding, to kind of become sort of like a member, like a mentor. I already did my own angel investing to a certain degree of doing it successfully and not successfully. So I had some patterns that I could recognize what would make my use of time and work best for any particular like idea or startup. So eventually became an angel investor in that startup, and started to like network with others in the space, and started to network with other VCs in the space. And we saw that there were just not so many venture capital firms looking at Bitcoin as a technology platform, and at Lightning in particular, there was just only a few. So we got really curious about that, and we started thinking that maybe to get the results that like would outperform like the others' results, you probably need to focus on doing something that other people are not doing. And so we just decided to have to set up a fund with a very kind of contrarian venture capitalist type of bet. So instead of diversifying across scaling approaches, across blockchains, or across a wider spectrum of technology domains, we decided to be very concentrated on Bitcoin adoption and Bitcoin scaling. And yeah, we've been like following that North Star, that thesis pretty much all the time, with like very rare and few exceptions that we still believe could be adding value to the Bitcoin and Bitcoin scaling narrative. So yeah, that was it, like a contrarian approach to build something that not really a lot of people were like interested in building, and to potentially become one of the pioneers and in like with this approach in the venture capital space.
Oleg, it sounds like you had very high conviction on that contrarian approach that you mentioned, and I think it'll bear it's already bearing fruits, right? And I think we'll start to see a lot more successful exits in the industry very soon. But I want to go back to 2018 that you mentioned is when Fulgur's origins were. I mean, we were in 2018 going through kind of the bubble burst. So I'm wondering how that LP fundraising experience was for you. I mean, there were, counted on one hand, if any at all. Others, I mean, maybe 1031. I'm not sure exactly how many at the time were focused on Bitcoin venture capital, but certainly very, very few. How were those conversations for raising LP capital for your first fund? I mean, what was that approach, and what were you hearing from investors then, and how has that evolved throughout the years?
You're raising a good point. So we kind of almost like missed all the hype and craziness of 2017, and things were becoming a little bit more settled down. I mean, I've been always following a few people in my life that I met professionally, and I trusted their opinions on the broader things in the world, and that's how I actually learned more about Bitcoin in a more substantial way as a potential like new monetary system. So I basically learned about it from someone who I knew, and I had this kind of like another North Star just telling me that Bitcoin is like where you want to focus. I also approach things from basically fundamentals, like engineering fundamentals, and my previous angel investing experience taught me that it's just better to invest in what you really know how it works. I had to spend some time on Andreas Antonopoulos courses, on other courses, getting a Bitcoin certified professional certification, just really understanding how Bitcoin works, how Bitcoin scaling works, and how mining works. And it all kind of made sense to me from fundamental engineering principles that with this type of engineering approach, you can build a system that can scale and that can enable like broader adoption. There is one of these like engineering principles. Remember by name who created it, but you can Google it. So systems that are designed in a simple way, they have much better chances to scale and outperform systems that are designed originally in a complex way. So having like this, say like third opinion on like how you approach engineering systems and like scaling systems in general, and I've seen this like work out like in a few like other places in life. I think it was a good, well-founded conviction on just focusing on Bitcoin, and we didn't, and we typically don't raise from the public, so it's basically funds from people who believe in the Bitcoin ecosystem and who are entrepreneurs and who also understand what it means to build on Bitcoin. So we didn't have to go through this kind of like exercise to explain what we have been just like learning ourselves, and I think it made our life very easy.
Yeah, that's interesting. But I mean, around the same time too, even as a technologist, there are a lot of other blockchains, Web3 applications, tokens that were emerging in that time frame too, and a lot of VC money was kind of more attracted to that realm. You're very convicted on Bitcoin Lightning, this particular protocol. How did you approach, or did you look at all at some of the other solutions? I know you said the simplicity of Bitcoin's technology protocol was very attractive to you compared to like Ethereum, which has become more and more complex over time. But how did you take a look at those other protocols? Did you look at them at all, or did you stay solely focused on Bitcoin because you felt you found your North Star between Bitcoin and Lightning and just, kind of put to the side everything else? But really curious about how, as a VC, you segregated the Bitcoin only focus compared to other blockchains and quote unquote Web3 crypto projects.
So there's maybe a few things that we always kept on the radar, and we were always very mindful about. Also, to go back a little bit to your previous question on venture capital. So I had the opportunity to go to Silicon Valley for a while and to study venture capital taught by Silicon Valley venture capitalists and entrepreneurs at Stanford and in Berkeley. So it was in 2019 when we were starting to actually build the fund, and that was very instrumental to being able to become like quickly very efficient in making like our first deals. But that was in 2019, and what I noticed in general about the venture capital landscape is that there was little attention paid to like engineering fundamentals and more attention paid to kind of like quick scaling and quick growth. And remember, that was still like before like 2021, 22 like craziness when all the markets were going up again. But I think that Silicon Valley education gave me a taste of like misallocation in venture capital that we started to see, and we also saw that there was maybe not enough attention being paid to technology fundamentals, but more attention being paid to making the numbers work so that there is a progression of like fundraising, and there's like a bit of like a rabbit race to higher valuations and higher results, which was not sustainably supported by the core business model and by technology fundamentals. And there was one venture capitalist that I also met there. He was like a sole GP on a number of funds that had very successful exits to Google and the top companies in the technology world. And he also came from the higher ups of the software engineering space. And he made me think. The fund's name was like Electric Capital, and the GP, he was a former VP of I think VMware, one of the top infrastructure firms in Silicon Valley. And he basically was so unique in his approach, just working directly with engineers and ignoring all the noise, trying to solve the real problems in software infrastructure. And that and this sentiment that venture capital is being misallocated without proper due diligence on the underlying technology made us really good learnings for us to really kind of focus on what we wanted to do. And at the same time, we always recognized the opportunity to learn from the other spaces. So being like entrepreneurial and like having some like software businesses like behind us, we also kept our minds like very, very open to kind of like try and understand what is the best in all like technologies. It's just there is so many experimentation in the blockchain space, and there was like a big tail of like the post ICO experimentation in like 2017, 2018 that we kind of like tangentially saw just like happening around, but luckily we missed most of that noise. But we always appreciated the opportunity to learn from the technology approaches and how they work and how they don't work in the other blockchains to make better decisions for what makes sense or what could be possible to build on Bitcoin, so that Bitcoin becomes the best platform out of all, scaling better and having broader adoption. So learning from other blockchains is a really important part of the exercise. But it just there's so many things going on there, even in the new kind of newish Bitcoin layer twos. So it's just impossible to follow everything that is happening. But there is a lot of interesting things in how things evolve around the other blockchains that just give good food for thought. It's so easy to find a person that you would kind of like trust, and you would quickly get a summary of like a gist of what does that thing like ZK rollups do, or what does that other thing does, so that you can quickly learn from it. So it's so easy, but learning by comparison also gives very good um, ground for learning, and you can learn a lot from Ethereum journey, from the journey between like the DAO hack and the Bybit hack, and there is always opportunity to learn. So we're trying to not miss this opportunity, but we really focus on Bitcoin, Lightning, Liquid, and the space that is directly building on Bitcoin technology.
It's interesting, Oleg. I was reminded with what you mentioned from the Silicon Valley learnings from a few years back. Around the same time period, 2018, I was working at a big Silicon Valley accelerator and VC fund, traditional tech. And I remember thinking at the time a little bit of what you mentioned. I mean, I didn't like what I saw in the sense of what the industry had evolved into, this kind of blanket approach, a lot of malinvesting, and it seemed like a lot of math gymnastics to just grow at all costs and get exits and, put the unicorn stars on your fund. It truly does feel like Bitcoin venture capital is bringing venture capital back to its origins and its true purpose, right? Of being low time preference, a long-term view, and Bitcoin, I think, is grounding us. There's just so many layers to it. But as far as the technologies, because we have seen Bitcoin evolve a lot since 2018, Oleg. So you've been active in the Bitcoin venture capital space for around 7 years now, and since then we've had Taproot, Lightning, other layer twos. We've seen Wall Street begin to merge into the space. We have a lot of things going on around financialization of Bitcoin, which I know Fulgur is also very involved with. Can you share with us a little bit of how your thesis from 2018 has evolved to now regarding the technology behind the Bitcoin protocol?
Yeah, it's a very deep question for like a lot of like self reflection. We usually like self reflect like every year in the beginning of the year, and this year has just like been totally crazy in the anticipation of like the bull run and with all the regulatory changes all over the world, and especially driven by the new administration in the United States. So we're still reflecting on this, and maybe our thesis was like a little bit naive in the beginning, in a sense that it was like very puristic about Bitcoin Lightning Network, which kind of makes total sense in terms of the product market fit of like an engineering technology and the problem that it can solve. And the problem is facilitation of faster and cheaper payments. I mean, it's like if you think of like Jeff Bezos saying that like how he built Amazon. So he built Amazon because fundamentally consumers want faster delivery and cheaper products. And that was like the core product offering of Amazon. So you just like get what you want faster and cheaper. And if you apply the same to payments, it's like completely universal and global. Like payments drive value across the world in all the sectors of economy. There are different types of payments. There's large payments, cross net payments, consumer peer-to-peer payments, business-to-business payments. So there's a lot of payments, and maybe Lightning Network in particular can be better at solving very specific payments that, for example, like Visa and MasterCard are not really um, very good at. So payments where you have small amounts, where you need low commissions, maybe also like peer-to-peer cross-border payments that create like a lot of friction. And take, for example, even like web payments. So when PayPal started as this kind of like backbone of like web payments, so that you would not have to enter your credit card like in all the websites, but you would just like check in, check out with a PayPal account. If you see where the web payment experience has evolved, where you have so many different ways and so many different startups offering some kind of payment facilitation, it's just becoming overcomplicated. And when you're being asked to pay $1 for like a newspaper subscription per month, and you're trying to do it from a phone, so you kind of get to a place where you start noticing that there is a huge potential in just payment innovation, and we are not even talking about machine-to-machine payments like micropayments within like messengers, but in general, the payment narrative is such that when you see messaging velocity increasing from the 100 years ago, like pigeon mail, to telegraph and phone, and eventually like instant messengers and Twitter with small messages. So with the payments, you can basically apply the same. You have payments with like a stone, with coins, with paper money, then with digital money, and then the more efficient you become with payments, the more opportunity you can unlock for commerce. So fundamentally, the potential for Lightning for payments is clearly there, especially if Lightning is able to carry a stable coin, which means there is going to be like less complexity with liquidity management, better integration with traditional finance, on and off ramps, easier in terms of like tax exposure, going like in and out of an asset where there is a potential like taxable event. So we still believe like that the like stable coin on Lightning is kind of like one of the killer features that can unlock massive potential in global commerce. Payments for digital content, like digital native payments, like for example in like 2017, 2018, we did a lot of like brainstorming where would this like Lightning micropayments could go, and clearly like gaming and digital content was on our radar. And what we're seeing now is one of the most interesting companies that are able to successfully monetize Lightning Network. They are actually for payments. They are actually in the gaming space. In the content, it's a little bit more complicated because there's a lot of legal mode around how content rights are centralized and distributed, which is not so ripe for technology disruption. But digital payments and digital native payments in games or like in social media. So we clearly see this happening. But as we learned more and as Bitcoin became more and more recognized as an asset class and entered the institutional investor space, especially some acceleration following ETF launches. And now there's even more acceleration with Bitcoin as a treasury being considered by private companies, public companies, governments. Even the US government is thinking about something like that. So we started to think more and more of like Bitcoin as an asset class, and what kind of platforms and technologies can enable not only payments but also institutional settlement, and also creation of instruments and platforms and solutions that would unlock value in Bitcoin as an asset class. So we're kind of started to broaden the scopes from just payments to the whole phenomenon of what Bitcoin brings to this world. So it's an asset class, it's an investable. You can have tokenized assets that give exposure to Bitcoin, such as, for example, like Liquid Network. You could also use Liquid Network as institutional settlement, where there have been like continuous attempts to try to use blockchains for institutional settlement, revealing different types of like product to problem mismatch, either like with two information, like being like too much public, or like too much complexity, increasing like surface of attack for like say EVM-based blockchains with like sophisticated smart contracting capabilities. Um, and we started to see that something like Liquid Network, or like Elements, basically, broadly speaking, the code base that's derived from the Bitcoin code base, and this what enables Liquid Network to run. This could become an interesting alternative to all these previous generations of blockchain experimentation in the financial enterprise, by offering a unique combination of regulatory friendly, privacy preserving, and a set of security guarantees at the same time that probably do not exist on other like blockchains with that are not secured by Bitcoin mining, that have like sophisticated smart contracts, which you may or may not need all the time. So Liquid as a settlement and in general, like the problem of settlement in the institutional finance, where you need to like broker and settle different money markets products, treasury T-bills, private debt. So all that is a financial instrument that has its own like settlement mechanism that may have certain like deficiencies. Some of these deficiencies in settlement of this financial securities led to collapses like the mortgage crisis and other defaults, because like there was a lot of like intransparency in how the assets are being settled and who owes what to whom, etc., etc. So that's like an interesting area that we have been recently learning about, and also probably even more of an imperative for further adoption of Bitcoin is actually unlocking value of Bitcoin as an asset itself, meaning like a productive value, which like the first example could be Bitcoin collateralized loans. So now that there's so many people who have exposure to Bitcoin, some of them may not want to like sell it, triggering like a tax event, but might want to like borrow against it. And you can borrow against houses, you can borrow against like other types of collateral, which are like less liquid, which have different like settlement mechanisms that are less efficient than you can have if you settle natively on Bitcoin. So unlocking productive value in Bitcoin as an asset by, for example, enabling Bitcoin collateralized loans, by enabling loans against other financial instruments that can settle in a guaranteed way on a Bitcoin-based settlement network. So these are like really interesting opportunities that we see are emerging as Bitcoin enters further adoption, and especially in institutional finance, but also with businesses.
Build with Bitcoin is a proud affiliate partner of River, a Bitcoin-only financial services company that I've personally been using for years. I really enjoy the strong focus they have on security and reliability, which ultimately leads to peace of mind. I know you're a big fan as well.
I am. I feel so confident referring people to River. In addition to what you mentioned, also they've got US-based phone support, which I think for somebody who's less familiar with the space or used to personal service is really helpful. In addition, they have a private client services division. So if you're looking to invest 100,000 or more, they have a special suite of services designed for you, whether you're a high net worth individual, a family office, or a trust. I also really appreciate the continued improvements they make in the back end so that reliability and security continues to be really apparent.
They additionally also have US dollar cash deposits paid out in Bitcoin. They have a yield product for that, which is an interesting alternative way of accumulating Bitcoin. Overall, fantastic suite of services. If you're interested in onboarding or opening up an account at River, use partner.river.com/buildwithbitcoin for personalized onboarding.
Like another area of the spectrum is just using Bitcoin as a treasury. I mean, that has to do with technology, though you still need technology such as like custody, potentially custody based on like multi-sig or even like a multi-party custody to be able to also ensure the Bitcoin that you keep in a treasury, which may be even more important, for example, for public companies or for governments. And there is also a problem with how to insure Bitcoin, and there are interesting companies working on that already that we are following and we're looking into. So as Bitcoin adoption broadens and enters like both like mainstream in consumer finance and also makes its inroads into the institutional finance, there's like a plenitude of options where to look at around where Bitcoin can bring value both as an asset class, as a productive asset, and as a settlement layer, or like as a combination of settlement layers. You can even think of like a combination of liquid plus lightning plus traditional finance to solve many types of problems that exists in today's global settlement network that are just not, especially speaking about like traditional financial settlement networks, that are just not up to the speed with which the economy is moving forward. So typically there's everything is accelerating, and the economy is also accelerating. And for accelerated economy, you can benefit from faster faster and more robust payment rails or settlement.
So much there to unpack. I mean, you just gave about a dozen incredible opportunities. But I think it comes down to, I mean, just tying it back to where you first started with in comparison to Amazon, faster, cheaper. And as you look at remaking capital markets, which is a theme that we also have talked to a number of companies that are just fascinating, more in the European domain, that I think like Stoker and what Blockstream is doing and the Liquid's ability to make financial markets more open, more global, operate on 24/7. How just like when you do your annual review and you think about this, I mean, we're believers in the fact that the Bitcoin protocol can help remake financial markets and make them more global and decentralized away from the concentration that's been on Wall Street for years. What time frame do you think that will occur in, or how do you view that on a big picture, and what kind of resistance do you anticipate coming from some of the larger banks that are now now becoming um, aware of what Bitcoin's potential is, and I'm sure you've seen their efforts to try and kind of tap into this, maybe through other blockchains or whatever. But what do you look at that trajectory? You see all the companies that are building and advancing this technology. So, will this be kind of parallel systems for a while, or do you feel that it will move toward disruption rather quickly?
Yeah, I'm probably not best positioned to answer this question because I have no background in institutional finance. But you gave some hint in your like question, which I'm going to take advantage of and try to expand from there. So you mentioned like this other blockchains, and we clearly see that some of the blockchains have a reasonably good footprint in the enterprise because they were able to go like faster with their like sales force trying to launch some pilot projects and get like their mind share into the traditional finance. And we clearly see that this may be impeding like Bitcoin entering the space, just because you can only do as much as you have like resources for, budget and attention, and like all this like plethora of other blockchains with EVMs. They created also a plethora of resources that you can use to like integrate by doing like simple work. Well, simple, it only like sounds simple because like as soon as you like write smart contracts, you need like security audits, etc., etc., and you kind of like really need to understand what's happening underneath, which may not be as simple as it sounds, but it gives all these blockchains like a simple head start, which they have been successfully using to capture the mind share in the institutional space. And this is clearly one of the factors that Bitcoin technology providers like will be facing. And At the same time, some of these blockchain projects have been like failing or revealing deficiencies. You also mentioned liquidity. So one of the deficiencies that can potentially contribute to like delay of this like adoption of new like settlement technologies is actually lack of liquidity in products that are being like tokenized, that are being put on like say like blockchain. Obviously, like we've seen now like attempts to put like the most liquid products such as like treasuries in tokenized form, and this is like very very interesting, but there still needs to be like a market of counterparties who are willing and able to transact with this types of like new assets. So it's a little bit like bootstrapping like two sides of the market, and it's probably gonna take time depending both on how easy the switch from traditional technology or other blockchain technology to Bitcoin settlement can happen, and also how quickly the use cases develop around tokenized assets. that use Bitcoin native tokens, either on the Liquid network or on the Lightning network. So yeah, I don't have a good answer for this. I think these are interesting patterns to watch. So where the liquidity is going and what kind of use cases can be unlocked first. One of the interesting use cases is of course borrowing against Bitcoin. So you kind of want it to be very secure and very reliable with like thoughtful liquidation process and guarantees, probably involving multiple parties to be able to protect both the interests of the lender and the interests of the borrower, the original holder of Bitcoin. So maybe this is like kind of like a low-hanging fruit for innovation that we already see happening. We were following closely a number of startups who are involved in Bitcoin lending, either on the technology side or on like the whole like kind of like as a solution provider. So maybe more like traction will be here first, and then maybe you can like lend against like other assets that are tokenized and secured in like a similar way. So there's definitely going to be a learning curve. Yeah, I'm just not a TradFi person to really give like my best guess on this.
Yeah, we've certainly seen an uptick in the collateralized lending using, Bitcoin's hard money properties. Just recently, right, Lynn, we've had an episode with a custodian collateralized lending model, with a non-custodian collateralized lending model. I fully agree, Oleg. That's probably the lowest hanging fruit of the next wave of innovation. As far as Fulgur, bringing it back to Fulgur Ventures itself, Oleg, can you give us a snapshot of Fulgur? How many companies you've invested in? How many funds you have? Kind of just as a venture fund, what it looks like, any metrics you can share with us?
Yeah, I think most of it was recently published by the team that did a report on Bitcoin venture capital. They gave some shout out to Fulgur as being like one of the largest by the number of portfolio companies. So we've been investing, yeah, roughly in like 10, 12, like a dozen portfolio companies a year. So we've accumulated a portfolio of like over like way over 50 companies over this like 6 plus almost like 7 years. And we've as companies in our portfolio grow, we gradually started to pay more attention to like follow-on and growth stage financing. So having started as like super early stage, and we're still committed to supporting the founders from like the very early stage, basically like also first-time founders, technology entrepreneurs. That's kind of like where Fulgur's kind of strength comes at its best to support the Bitcoin ecosystem, as being from the software like and from technology entrepreneurship space, but also understanding Bitcoin as a phenomenon and understanding like the basic Bitcoin primitives, how it works. So we strive to support like early stage founders as always by supporting like hackathons and conferences where they typically meet and incubate their ideas. We're quite involved in launching several kind of like physical spaces that can host Bitcoin entrepreneurs. The most prominent one now, like having recently opened in Lugano, Switzerland, which is an interesting space from like a regulatory perspective. One of the countries to recognize Bitcoin and yes, crypto, but also Bitcoin like early on, having like very clear regulations and very entrepreneurship friendly ecosystem. So we will see more of these hubs opening like in the next years that hopefully will help new entrepreneurs enter the space and incubate their ideas. But we also are paying more attention to supporting growth stage companies because there are still not enough capital providers of like Silicon Valley type who can pull the trigger on investing in a Bitcoin growth stage company. So there's kind of like between the IPO stage and the early stage, there is still this kind of like void that is not typical for traditional venture capital, because in traditional venture capital there used to be like a misallocation, like everybody wanted to invest like in a pre-IPO like growth stage, but not really so much in early stage, and that's like probably one of the factors contributing to Silicon Valley missing out on Bitcoin entrepreneurship as a venture capital phenomenon, because they just were not focused on like detecting the next big thing, the next big idea in the technology domain. So growth stage, and also broaden our focus to from Lightning Network to the Liquid Network and Liquid Network ecosystem, and technology supporting Bitcoin collateralized loans, custody. So these are like the recent, I would say, additions to our thesis, which has always been sort of like an evergreen thesis. So we raise and deploy capital as we go, focused on Bitcoin adoption, Bitcoin scalability, and now like Bitcoin entrance into traditional finance. So that's kind of like a natural extension of our thesis. We are currently involved also with a new series of funds, which is called like the Plan B. Plan B is actually the brand name of the Lugano like Bitcoin initiative, originally conceived in Lugano in Switzerland, and that's where the first like Bitcoin co-working space came out of. And out of that also came a series of both like early stage and growth funds focused on Bitcoin companies, Lightning Network, and including tokens on Lightning Network companies, including Liquid Network, including emerging adoption, like adoption in Central America, which is an interesting new region that we're paying a lot of attention to, especially thanks to the government of El Salvador, who is paving like the way for governments to embrace Bitcoin, and now seems to be on a very good track, being able to integrate the traditional financial narratives such as IMF, traditional like geopolitical narratives such as building relationships with the United States, and also building relationships with Bitcoin ecosystem and supporting the Bitcoin ecosystem. So emerging markets, El Salvador, Central America, South America, Southeast Asia. It's also interesting addition, looking into Japan as well, which is like a very interesting, very closed market that totally requires dedicated effort, both like culturally, language wise, and like being present in the local ecosystem. But it's a very big market that has potential to follow the developments in the United States. That is how typically like we, as far as we are aware of, the Japanese like dynamics goes, just like following the United States in some of the key aspects of say innovation. So yeah, that's kind of like the summary of the broadening scope. It's growth stage, it's emerging markets, it's assets on Lightning and Liquid Network, and their surrounding ecosystems, and it's enabling productive use of Bitcoin as an asset, and after that also productive use of other assets that can be represented in tokenized form and settled using Bitcoin technology, such as real financial assets. Could be like debt, securities, and other sorts of things. We'll see what comes.
Look, I mean, when you look at the big picture of venture capital, I mean, first of all, I couldn't agree with you more, coming from a VC background myself, about the misallocation. and the growing misallocation with tokenization models for VC exit liquidity and whatnot. But as Bitcoin VC matures or becomes at least on the radar of financial institutions, I mean, I think those of you who have started this, identifying the opportunity and just seeing the promise of this technology and invested in it. But as companies grow, they might need larger pools of money for growth. In some cases, we also see that having a Bitcoin treasury might preclude a company from requiring the same amounts of money that traditional tech did. If they've invested their treasury in Bitcoin, they might have less dependency on VC. But, how do you see the space evolving? Do you see those of you who have gotten an early start just raising larger funds? Ego Death also raised a growth fund on top of their early seed stage fund, and probably we'll see a continuation of that. Do you ever see traditional VC funds or other money coming into the space? And do you think that's not healthy for the space in terms of the ethos of the Bitcoin company? Or, I mean, for all of these companies and the infrastructure of Bitcoin to grow in adoption, will there be a filter for having true Bitcoin oriented VC thought process or bringing in other pools of money?
We've always strived to work together with other VCs, and we clearly saw that there is like only a handful of Bitcoin focused VCs, both being able to raise uh, continuously capital and to also deploy this capital thoughtfully in the Bitcoin startups, and you named a few of them. So we always enjoy working with Ego Death, with 1031, with Stillmark, and Lightning Ventures and other VCs in the space. And they have like sort of like become a filter of capital, I guess, by also taking on their shoulders like the hard like part of raising capital into the venture capital space. There is also Time Chain and a few others that we are always happy to work with. And like as we started as a venture capital firm focused on Bitcoin as a technology. When you start thinking of asset management in a broader sense, like how would you manage assets when somebody is looking for exposure into Bitcoin? So I think over time it just like becomes kind of like a merged asset management function. And for asset management, you need to be a professional in what you're doing. So it may be that there will be like an emerging class of asset managers who are focused on providing Bitcoin exposure to different types of investors with different risk and reward appetite and different horizons. Like for example, venture capital is only like one way of allocating capital with exposure to Bitcoin, which is illiquid, which has all the plus and minuses of like venture capital. But there is also Bitcoin accumulation, and you can accumulate Bitcoin in a multitude of ways. You can buy Bitcoin in like small chunks or large chunks. You can do dollar cost averaging. You can store Bitcoin with a centralized custodian, with an insurance, or in a self-custody, or in a combination. So even just giving exposure to Bitcoin as an asset, it's kind of like becoming an art, because there is like more technology and more approaches. You can also invest in a fund that is kind of creating yield on Bitcoin. I'm not speaking about like a questionable yield where it's hard to answer, like where exactly is this Bitcoin going and where the yield is coming from. So there could be like properly structured financial products that can potentially create yield on Bitcoin in a thoughtful way. Even just like think of a of a treasury of a startup that becomes a profitable company. So if there is Bitcoin in the treasury and the startup is profitable and they are converting part of their profits into Bitcoin and they are distributing it to the shareholders, it's almost like you're creating yield on Bitcoin. But there is no kind of like there's nothing that you don't understand about it. So it's very clear. There is no kind of questionable yield generation technology involved into this. And just like to finish in this like asset management space. So accumulation of Bitcoin, exposure and venture capital, which are kind of like both working well together because they're a little bit like decorrelated in cycles. You typically invest in startups like on the opposite part of the Bitcoin growth cycle. But there is also investment in the structured products that can try to outperform Bitcoin or can give exposure to Bitcoin with limited downside risk and potentially like limited upside as well, where the downside protection and upside are managed by a like professional asset manager. And so there is actually many ways to think about capital allocation to Bitcoin, and we've only like touched maybe a few. But you probably need like a class of asset managers who understand Bitcoin, who understand the technology, who have access to the infrastructure, both on like the custody side and on trading side, and who are regulated in a specific market where they would like to serve the investors. And also, you can invest not to forget the last part. You can invest in tokenized assets that are on the Bitcoin. On the Bitcoin technology, and there's a totally new type of investable asset class that can be like ETFs or like public stock companies, but just traded on Liquid network or something like this. That's again like new type of infrastructure, new type of regulations to enable this. It will probably we think there is a potential for a class of asset managers to emerge. But there's always potential for capital allocators to join like existing asset managers. You named like many of them, and they're like all known in the space, and they're like potentially could be more. So asset management is going to be an interesting space to watch.
I want to pull out something that you mentioned that is something that Israel and I have thought about and talked about with some of our guests. But you mentioned Bitcoin companies that become profitable that might start paying out some of their investors in Bitcoin from the treasury. I mean, we really look at that. I mean, I'd like to ask you how you think about exits. What is a successful exit strategy for your portfolio companies? Because, I mean, is there a possibility in this new world of Bitcoin-based companies that rather than IPO or exit via sale to a larger entity, perhaps traditional finance, that they become they pay out Bitcoin. If Bitcoin is a scarce asset and everybody starts chasing it, including sovereign treasury countries and more corporations, those who hold Bitcoin on their treasury, I mean, having a Bitcoin dividend or a payment could be a better form of an exit. I mean, I don't know if you've thought about that or how you look at, from Fulgur's perspective, what would be a successful exit for your companies?
It's a very deep question as well, but probably IPO is like a very easy kind of like uh, to try and expand from. So as we've touched with like Israel, there has been sort of like a capital misallocation and erosion of like venture capital thesis in traditional Silicon Valley way, and we've seen IPOs that are not like very successful. We've also seen crypto IPOs that are like basically detrimental to the value of most of the shareholders. We've also like seen other like IPOs in the making. I don't want to mention any, but there's an interesting um, source that I read. It's called like The Information. It's like one of this kind of like Silicon Valley venture capital publication platforms that recently wrote up about a startup where like the founders just like cashed out like enormously on a pre-IPO race. So there was like so much demand to IPO for a particular thing that that the founders were able to cash out like an outrageous amount of money. Um, so there's a lot of like strange narratives around the IPOs. So I think where IPO would make sense for Bitcoin is because it's a stamp of approval. So there is a rigorous diligence process, and there is regulators involved, and all the financials need to be audited, and there needs to be a recognized auditor, and the governance of the company needs to be up to a certain level. So just making a company like go public is a tremendous amount of effort that would probably first pay off for the Bitcoin space as another stamp of approval. So now you can have like public companies. There is a lot of transparency. There is also a broader access to capital. So we were speaking about venture capital, which may need to kind of like grow and to raise more money to support companies in the growth stage. But you can raise different types of money. I'm not talking about MicroStrategy raising, which is also very interesting, but a very special type of exercise, which also opens an interesting opportunities to raise money for, well, they're not raising. What I'm saying, like, it's a great idea, but it's not raising money for expanding the company, the business, for growing the Bitcoin ecosystem. But you could do that also, and use it for growing the company's business and expanding the ecosystem, especially if you're doing it for a company that is. That's core business is actually building in the Bitcoin space and providing Bitcoin services. It's a tremendous learning exercise for everybody who is working on Bitcoin. The strategy or like the former MicroStrategy exercise, which teaches us a lot of what can be done when you're a public company. What are the limitations of raising and how you can couple it with Bitcoin to unlock a tremendous opportunity to raise capital. So imagine what it could look like if all this capital is productively used to develop the ecosystem, to hire salespeople, to enter into institutional finance with a stamp of approval of like being a public company. Um, it could be very interesting, and I think the exits like this that give a stamp of approval is really really interesting, or the exits where a certain technology would become like a backbone technology of a certain type of like institutional business. Or it will enter into mainstream gaming, like with the AAA publishers or like the biggest brands in the gaming space. So this kind of like yeah, I would still say it like it's more like the value that's being created is stamp of approval and further like ability to further scale rather than like cashing out for investors and founders. But obviously like there's some sort of like cash out, I guess, like at an exit, and that's just part of the game. But I think in the short to mid term, this kind of like stamp of approval type of exits is what is was really going to be interesting to watch out for. And especially if also it compares to, like other blockchains. We'll see how it all kind of performs. It can be very, very interesting to watch.
Yeah, and we are seeing the early signs of these stamps of approval. We had the first IPO for a Bitcoin only company this year, Fold, which is actually a portfolio company of Fulgur. But this conversation, Oleg, just is a reminder of how we're just only scratching the surface. I mean, you touched on so many different business models, so much potential for the reach of this technology. And earlier, your mention of Amazon reminds me of the quote from Jeff Bezos, where they were asking him about consumer behavior going into the future, and he mentions, well, I think it's easier to tell you what won't have changed 10 years from now, and that's people will look for still cheaper products and faster delivery. And it, kind of, it reminds me, plugging that into Bitcoin, if you kind of juxtapose that and think what's pretty much a guarantee going into the future is people will be looking for more accessible and cheap financial services, good savings tools. And when you look at the addressable market of that, I mean, it's just so massive, right? And I think this conversation goes to show how much innovation is still to come in the space. So we want to be respectful of your time, or like all that to say that this conversation has been one of I think the deepest that we've had. So really appreciate you coming on. Lynn, I don't know if there's any last questions or anything from your end.
Well, I'll just make a comment. We've been wanting to have Oleg on for quite a while, and I'm so happy that we're able to finally get you on the podcast. And I'm just going to warn you, we're going to try and book you again for like 6 or 8 months from now, because there's a very small universe of very quality investors that are supporting the Bitcoin infrastructure space. And I think that we need to, to really pay attention to the way that you think about things, and the other VCs that you mentioned that you're working with. But, this is really the driver of the future. I mean, you guys are seeing all of the companies that are evolving. You're supporting the ones where you see have the most potential, that, really can help support the adoption and usage of Bitcoin and drive it in the correct way. And we really applaud you for the efforts that you're making. I mean, the conversation, my mind is just spinning, because I think you brought so many things to the table, and things to think about in terms of what are the opportunities for innovation. To Israel's point, you can see that we're just scratching the very beginning. But I would like to just leave it to you, Oleg, just for some final comments in terms of, where people can follow you, if there are any opportunities. I know you mentioned that you don't generally raise from the public, but if there, how somebody might want to approach investing in the startup ecosystem. And then also, if you'll be at any of the upcoming conferences or speaking. You and I were together speaking at Plan B in El Salvador in a panel discussion. But where else might people find you and be able to follow what you and Fulgur are doing and thinking about?
Yeah, I once again really appreciate you making this happen. It was a real pleasure, and we, as you might have noticed, we're very bad on putting time into social media. So we do have the website from 2019, and you can still find it, and it will still be there in 8 months, and I hope in the next years as well, as well as a Twitter and a LinkedIn. So we probably should do more to keep them up to speed with everything going on. But we're on all the basic social media. And one I was thinking a little bit of what Israel was just saying about Amazon consumer behavior. He kind of managed to frame it more accurately than I did. Thank you, Israel. And yeah, I was thinking about this other thing that one of your colleagues from the UK, it's one of the Bitcoin thought leaders, and I think a book writer, mentioned in their podcast is Bitcoin is about freedom of expression, and money is also about freedom of expression. You can express yourself with communication, and there is certain protection rights acts that that guarantee the rights for communication. But expression with money, it's also like another way of expression that people naturally have. And on the consumer side, there is probably a lot that's going to depend on how people care about their freedom of expression, using both speech and also like monetary instrument. And Bitcoin clearly has a lot to offer here. But again, it depends on what consumers like fundamentally demand. Um, so that's going to be like an interesting chapter about Bitcoin adoption and consumers that we're probably gonna see unfolding like in the coming years when more and more people get exposure to Bitcoin. What they're gonna be wanting to actually do with it. Um, and yeah, we remain at your disposal, and thank you again very much for arranging this. It was a real pleasure.
Pleasure was ours. Thank you.
Yeah, absolutely. Thanks a lot, Oleg.
Thanks for listening to the Build with Bitcoin podcast. If you found benefit in what you heard in this episode, we'd truly appreciate it if you would like, share, or leave a comment on whichever platform you're listening, as this helps others find us, which is especially important for a new podcast. And as a reminder, our content is intended for educational and entertainment purposes only and is not to be considered investment advice or a recommendation to invest in any company or asset mentioned in the podcast. Build with Bitcoin is a proud affiliate partner of River, a full-service, 100% reserve custody, Bitcoin-only financial services company. For your next Bitcoin purchase, use our exclusive link, partner.river.com/buildwithbitcoin. Thank you sincerely for being a part of the Build with Bitcoin community.